Hey, what's up everyone? This is Flame Capital here and welcome to today's video. Today we will be covering the top 5 indicators of profitable trading. By the end of this video, you will have a good understanding of how to use technical indicators to perfect your entries and exits for both stocks and options. Technical indicators can seem very difficult for beginner traders, however it doesn't have to be, and we will share with you the most common technical indicators used in charting and how we use it in our strategy to enter trades. The first indicator that we always like to cover is the RSI. The RSI stands for the Relative Strength Index, and it compares the magnitude of the recent gains to the recent losses to attempt to determine whether a stock is overbought or oversold. You can see from this chart here that the RSI ranges from 0 to 100. A stock is deemed to be overbought if the RSI is over 70, which means that it's a good candidate for the stock to get pulled back. Likewise, if the RSI is around 30 or lower, the stock is oversold and most likely to reverse and bounce back up. Traders will often use the RSI coming back out of overbought or oversold conditions as a signal to enter the market. The second indicator that most traders will look at is the MACD, also known as the Moving Average Convergence Divergence, and it is one of the most well-known indicators in technical analysis. This indicator looks at the two exponential moving averages, which helps measure momentum. These moving averages and the changing distances between them become the MACD. Convergence means moving averages come closer together, and divergence means that they move further away from one another. You can see here from this chart that when the MACD lines cross, one being the signal line, it is an indication that the stock price is about to change directions. So we see here that right when the line crosses, we see that the stock price is starting to change directions here. The third indicator is the Bollinger Band. The Bollinger Band starts off as a simple moving average and has two standard deviation plots away from it. And basically, this tells you the volatility of the stock and the range that the stock is currently trading at. So when the market becomes very volatile, you're going to see a much bigger Bollinger Band. And when the market or the stock is less volatile, you're going to see a much more narrow band. Next, we're going to talk about the EMA, also known as the Exponential Moving Average, and this is a type of moving average that places greater weight and significance on the most recent stock prices, and this is really great for trading in the near run and near term. A lot of day traders use this to really predict how the stock price is going to move. So usually when we place a trade, we look at the 4-day exponential moving average and the 9-day exponential moving average. And what we're looking for is basically how the stock is moving in terms of the 4-day. Usually the 4-day is a very good indicator of how the stock should be going. You see here that Tesla in this example is it's following along. The blue line is the 4-day here, and you can see that the stock price is fairly close to how that line is going. Occasionally, we will see that the stock price has changed directions, and a lot of times when this change in direction happens, the 4-day and the 9-day EMA intersect. And so a classic example of this is on July. Here we see that it intersects here while it's pretty flat here, and then it starts to go up here. Similar case here where it's flat and it seems like it's about to pick up here as we see a cross here. You can also use this in downward trends as well. So we can see here a little bit before March, on February 24th, we see that the 4 and the 9-day intersect right here, and then we start to see a downward trend. We see a downward trend until they intersect again, where they start to make an upward trend. So this is a very good tool to, really see when the stock is about to change directions. The 4-day being a very great support line that you should think that the stock price is going to continue to go that way, and the 9-day being more of a line to see when it intersects with the 4-day to see when that stock is going to start to move or change directions. Finally, we're going to cover the slow stochastics, and this is one of my favorite indicators of all time. The slow stochastics oscillator is a momentum indicator that shows the location of the close relative to the high-low range over a set number of periods. The indicator can range from 0 to 100. The closing price tends to close near the high in an uptrend and near the low in a downtrend. When we see it at the very lower range of this line here, which is 20, it is indicating that the stock is very oversold and that we should see a change in direction eventually. We can see here that the stock was going on an upward trend in April until we see around April 13th where it's way overbought and we're seeing a momentum change. And similar to the 4 and the 9 EMA, the momentum change happens in the slow stochastics when the lines intersect. So a good example of this is July 13th here. We see that on the peak of this, the lines intersect and then we start to see a downward trend. So it's very important that when placing a trade, ideally you want to enter when the stock has just crossed lines, and that's a great way to really know that the stock is about to move and change directions. Now I'm going to share a strategy with you guys on how we use the RSI, the moving average, convergence, divergence, and the slow stochastics, as well as the 4 and the 9 EMA and the Bollinger Bands to place our trades on a daily basis and how we tie this all up together. So here is a FMCI chart. FMCI is a SPAC, and we will be covering SPACs in a later video of what that is. So definitely check that out. But FMCI is a SPAC where we see that it's been trading fairly flat from March to June, and we start to see some crazy movement here. It seems a little bit, all over the place, but we're going to show you how to break this down so that you can time your entries and exits properly. So first, let's take a look at May. At the very beginning of May, we see that the slow stochastics is at an all-time low, way below 20. We see that the MACD is fairly flat, which means that the stock price hasn't moved much, and moving average, convergence, divergence is fairly flat. And we see that the RSI is not overbought, pretty neutral in the middle. If we look here, it's very hard to see the 4 and the 9 EMA in this case, but they're fairly flat together. So this would be actually a good time to buy, given that the slow stochastics is showing that the cross here is showing that the stock price is about to change directions. And we see here that a few weeks later in June that the stock price starts to lift up back from 11. So that would be a good time to buy. Similarly, let's take a look here at June 22nd and see what's happening around this area. So we see around June 22nd that the stock is making a pretty high move up, but now it's starting to go downwards. We see that the stock is at the top of the Bollinger Band, as you can see here. The Bollinger Band is fairly wide here, given that this stock is fairly volatile, is what that is indicating. So it's at the top of the Bollinger Band, and it's getting pushed down. There's some resistance that the Bollinger Band is giving here, and we're seeing that the RSI is showing that this stock is very overbought, as you can see here. And then looking at the moving average convergence divergence MACD, we're starting to see that the lines are looking like they're about to slowly cross, and which they do in July, which indicates that the stock is about to change directions. We can confirm that with the slow stow or the slow stochastics by looking at July as well, where the stock has crossed lines again. We see that it happened earlier on the 22nd of June, which would have been an ideal place to sell or buy put options. So that is a good indication that the stock price is about to change directions and a good place to sell. So if you had sold here, you would have been in good shape, and I wouldn't recommend buying for a while until we see the slow stochastics again being below 20. And we see that here around July 13th. Between July 13th and July 20th, and we see that it goes very low again, and the lines are looking like they're about to cross the red and the black line. So that pattern right there is a good indicator that the stock price is again about to change directions. We're looking at the RSI here, and it seems like it's fairly neutral, not overbought or oversold. The MACD is still showing a downward trend, so it would have to be a little bit cautious here, given that the stock price could still continue the downward trend. However, given the slow stow, the momentum seems like it's about to change, and this is why this is one of my favorite indicators, which it does. So if I were to really rate the significance of these indicators, what I really like to look at are, first, the slow stow being my first and most favorite indicator. Second, being the EMAs, the 4 exponential and the 9 exponential moving average. Third, the RSI, and fourth, the MACD. I think the EMAs is one of the most underrated indicators. They're very, very helpful to just see the trend of how the stock is moving, and the lines really help clear out this mess that you see here. So there's candles everywhere, but if you just follow the lines, it gives you a good idea of where that stock is going to move. Alright guys, so that's all for today's video. I hope this video really helps, and feel free to check out our Twitter. Our handle is @FlameCapital. Give this video a like, and please share with your friends, and see you next time.